What is CapEx, and why does it sit below your net operating income? Capital expenditures, or CapEx, are big, long-term investments in a property: the roof, the HVAC, the parking lot, the structure. Unlike operating expenses, which are day-to-day costs, CapEx is large, infrequent, and adds long-term value. The tax view. CapEx is capitalized and depreciated over years, not written off all at once. Here's the key point. CapEx is below the line. It does not reduce your net operating income. That matters because value equals net operating income divided by cap rate. CapEx hits your cash flow, not your income. A new $200,000 roof doesn't change your income, but it's very real cash out the door. In a triple net lease, who pays CapEx depends entirely on the lease structure. In an absolute triple net lease, the tenant pays everything, even the roof and the structure. In a double net lease, the landlord usually keeps the roof and structural CapEx. That single difference can swing a deal's true return by a lot. Smart investors set aside replacement reserves to fund future CapEx. A common rule of thumb is to budget a set amount per square foot every year. Always ask, how old is the roof, the HVAC, and the parking lot? Deferred CapEx